Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at two 10 out of 10 tech stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. First off, I want to apologize for being MIA this past week. I was at a work conference and then when I got home I came down with a nasty cold, but we're back at it now. Today, we're going to take a look at two technology stocks that score a perfect 10. That is a 10 out of 10 on the TipRanks Smart Score, which looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that, they also come in with a strong buy consensus from Wall Street analysts. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. I found these stocks using the TipRanks stock screener. Of course, you can find a collection of these stocks under the top Smart Score stocks as well, but I like the screener because you can put in a few more filters. I wanted a double-digit upside potential, that's strong by consensus from analysts, and I wanted to narrow in on a custom PE ratio. That gave me my list of stocks below. You can check out those top Smart Score stocks and the stock screener on the TipRanks website or right on the TipRanks mobile app, which you can download using links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our 10 out of 10 tech stocks. First up, we're taking a look at Silicon Motion. They trade under the ticker SIMO, currently priced at $98.50. This is a stock we've talked about before, but it's been over a year now, I think. In the past year, it's gained over 66%, climbing 20% in the last 3 months. They do score that 10 out of 10 on the TipRanks Smart Score with bullish blogger sentiment, positive technicals and fundamentals, and increased hedge fund activity. Silicon Motion is the world's #1 supplier of NAND flash controllers, the brain in SSDs or solid-state drives that makes things like your laptop, phone, and data center fast and reliable. They turn raw flash memory into the high-speed drives the modern world runs on. Their chips manage more 3D NAND from Samsung, Micron, and others than anyone else, powering everything from AI servers to tiny IoT gadgets. Last year alone, they shipped enough controllers to store 75% of the world's new flash data. Looking at TipRanks AI stock analysis, they do score and outperform. While they do face some ongoing supply shortages and price increases for NAND flash, the company's ability to achieve significant revenue growth through new products and market share expansion indicate a strong competitive position and effective business strategy. And they did just share a strong quarterly earnings report with both an earnings and revenue beat on October 31st. Earnings per share of $1 beat expectations by 16 cents per share, and revenue of $242 million beat by over $17 million. They exceeded their revenue and operational margin guidance for the third quarter of 2025 and saw their gross margins increase to 48.7%, and said that they are confident about surpassing a $1 billion annual revenue run rate in this current quarter. Following that strong earnings report, we had plenty of Wall Street analysts weighing in, many of them increasing their price target. One of those was a 5-star analyst from Roth Capital. They boosted their price target by $30 to $120, saying that the Q3 revenue and earnings per share were well above consensus, and their guided Q4 was above prior run rate expectations. They note that they continue to be optimistic about forward growth opportunities across AI infrastructure, enterprise, and automotive. The Silicon Motion stock has 8 current analyst ratings and does come in as a unanimous strong buy. The average price target is $118, implying an upside potential of 20%. Looking at those price targets down below, all of them in the double-digit upsides ranging from 11.5% to one at 32% upside. For our second 10 out of 10 tech stock, we're looking at TSMC, or Taiwan Semiconductor Manufacturing Company. Trading under the ticker TSM, this stock is currently priced at $297 per share. It is another one that we've touched on before, but I think it's probably been about a year. In the past year, it's climbed 52%, and in the last 3 months is up 27%. They score a 10 out of 10 on the TipRanks Smart Score with very positive crowd wisdom, very bullish news sentiment, and increased hedge fund activity, with hedge funds increasing their shares by 2.9 million last year. TSMC is the world's largest and most advanced contract chip manufacturer. operating a pure-play foundry business model where it produces chips based on client designs in its cleanroom facilities. They don't design their own chips for sale. Instead, they exclusively focus on manufacturing them for other companies that specialize in chip design, known as fabless companies. They print the world's fastest chips for Apple, Nvidia, AMD, Broadcom, and every AI supercomputer on Earth, powering a vast array of electronic devices, including smartphones, laptops, and AI systems. They also score and outperform on TipRank's AI stock analysis. Their consistent revenue growth highlights their strong market demand and effective business model, ensuring long-term financial stability and expansion. And their leadership in advanced technology nodes like 3nm strengthens their competitive edge. They also had a strong recent quarterly earnings report in mid-October, where they beat expectations and raised their future outlook. Earnings per share of $2.85 beat expectations by 22 cents per share, and revenue climbed 10% sequentially to $33.1 billion. They see robust AI-related demand and expect their full year 2025 revenue to increase by close to mid-30% year over year. Just last week, we heard from a 5-star analyst at Needham who reiterated a buy rating, saying one of the key reasons behind his buy rating is the anticipated increase in Taiwan Semiconductor's N3 capacity, which is expected to drive significant revenue growth. Also, the expected volume increase in their Rubin GPU in 2026 is likely to contribute to this growth as well. TSMC has 9 current analyst ratings, coming in as a strong buy with 8 buys and 1 hold. The average price target is $340, implying an upside potential of over 14%. Looking at those price targets down below, once again, we see a lot of analysts increasing their price target following that earnings report. On the low end, we do have a price target from back in September that has a slight downside of 2%, while our high-end price target comes in with 34% upside. So that is a quick look at 2 tech stocks scoring a 10 out of 10 on the TipRank Smart Score and rated a strong buy among Wall Street analysts. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thanks so much for watching. I'll see you back here next time.